On April 24th, COMEX cut silver futures margins by 39%. Same day, same announcement, gold got 22%. Do the math real quick. That's a 17-point gap. Silver got 76% more margin relief than gold did. And here's the kicker. This kind of preferential treatment for silver over gold has only happened 3 times since the 2008 financial crisis. This is Bullion, and in the next 12 minutes, I'm going to show you exactly what happened those 3 previous times, why COMEX is playing favorites right now, and the 3 specific data points you need to watch in the next 2 weeks to know if this is the real deal or just noise. Because here's what nobody's connecting. COMEX doesn't make random moves. They've got risk models, they've got institutional pressure, and they've got positioning data we can actually track. So let's read the signals, not the headlines. All right, let me give you the raw data first, because I'm not about to waste 10 minutes building suspense when I can just show you the numbers. April 24th, 2025, CME Group official notice. Silver, SI futures contract. Initial margin requirement dropped from $9,000 to $5,500. That's a $3,500 reduction. Percentage-wise, 39% cut. Controls 5,000 ounces of silver per contract. New leverage ratio, roughly 27 to 1. Gold, GC futures contract, initial margin requirement dropped from $11,500 to $8,970. That's a $2,530 reduction. Percentage-wise, 22% cut. Controls 100 ounces of gold per contract. New leverage ratio, roughly 21 to 1. Now here's where it gets interesting. In absolute dollar terms, gold's cut was bigger, $2,500 versus $3,500. But in percentage terms, and in the amount of leverage now available relative to contract value, silver just got handed way more firepower. And this isn't some back-office technicality nobody notices. This is COMEX saying, we think the volatility risk in silver has dropped enough that we're comfortable letting traders control more of it with less capital. The question is, why silver way more than gold? What do they see that most people scrolling through Twitter don't? Pause for 5 seconds. Drop a comment right now. Are you holding physical silver, trading futures, or just watching from the sidelines? One phrase. Because where you sit determines how you should be reading the signal. And if you're new to Bullion, here's the deal. We don't do hype, we do data. We break down silver through structural signals before the crowd figures it out. Stick around, this is about to get real specific. So let's talk about why this 17-point gap actually matters. Because on the surface, someone might say, okay, they both got cuts. Who cares which one got more? Here's why it matters. Margin policy is one of the most honest signals an exchange can send about where they think a market is headed. When an exchange raises margins, they're saying volatility is about to get wild and we need more collateral to protect the system from traders who can't handle big swings. When they cut margins, they're saying one of 2 things. Option A, volatility has calmed down, we don't need as much insurance anymore, let's open the gates. Option B, we want to invite more capital into this market because liquidity is thin and we need participants. Now, COMEX cut both metals, but they cut silver almost twice as much as gold on a percentage basis. That tells me they see silver as either significantly less risky than they did 3 months ago, or they want way more participation in silver specifically. And here's the thing most people miss. COMEX doesn't care about retail getting rich. They care about market function. If they're cutting silver margins this aggressively, it's because their risk models, their volatility projections, and their positioning data all say it's safe to do so. Or, and this is where it gets spicy, they're setting up conditions for the next big move and they want maximum liquidity when it happens. Either way, the gap between silver and gold is the tell. It's like watching a poker player bet big on one hand and go conservative on another. The differential is the signal. Comment gap if that just clicked for you. And real talk, if this is making sense so far, share this with one person who's trying to figure out what's actually happening in silver right now. Not the hype channels, the real breakdown. Alright, so I said this has only happened 3 times since 2008. Let me show you exactly when, what the gap was, and what happened after. Time number 1. October 2010. Setup, silver margins cut 28%, gold margins cut 12%. Gap, 16 percentage points. Context. Silver had been consolidating between $18 and $22 for months. Gold was already in a bull market, hitting new highs. COMEX cut both, but silver way more. What happened next? Silver went from $23 in October 2010 to $48 by April 2011. That's a 109% move in 6 months. Then COMEX raised margins 5 times in 2 weeks in May 2011, and the price crashed 30% in 4 days. Classic setup and squeeze. Time number 2, July 2020. Setup, silver margins cut 35%. Gold margins cut 18%. Gap, 17 percentage points, almost identical to today. Context. This was mid-pandemic. Gold had already rallied hard. Silver was lagging, stuck around $18 while gold was pushing toward $1,900. Then COMEX cut margins, and silver got preferential treatment. What happened next? Silver rallied from $18.50 in July to $29.40 by August. That's 59% in 5 weeks. Fastest move since 2011. Open interest surged. Physical premiums went nuts. Then it consolidated for months. Time number 3, March 2024. Setup, silver margins cut 31%. Gold margins cut 15%. Gap, 16 percentage points. Context, silver had been dead money for most of 2023. Gold was making moves on central bank buying. Then, March 2024, COMEX cuts margins. Silver gets the bigger cut. What happened next? Silver ran from $24 to $32 in about 8 weeks, then chopped sideways for 6 months before the January 2025 spike to $34. Pattern recognition time. All 3 times, the gap was 15 plus percentage points. All 3 times, silver had been underperforming gold leading into the cut. And all 3 times, silver rallied significantly within 8 to 12 weeks after the cut. Not every time was the same magnitude. Not every time lasted. But the pattern is there, and it's documented. Comment 2010, 2020, or 2024, depending on which one you actually remember happening. I want to see how many people here lived through these moves versus how many are just now learning the pattern exists. So if history rhymes but doesn't repeat perfectly, what do you actually do with this information? Here's the honest answer. You don't trade the margin cut. You watch what happens after it. Because the margin cut is just the match. What happens next depends on whether there's dry wood around to catch fire. Here are the 3 specific signals I'm tracking over the next 2 weeks. Signal number 1, silver open interest. As of April 23rd, the day before the margin cut, silver open interest was sitting around 182,000 contracts. What to watch? If open interest climbs above 200,000 in the next 10 days, that tells me new money is entering. Real capital, not just retail FOMO, institutional positioning. If it stays flat or drops, the margin cut didn't attract serious players, and this whole thing fizzles. Where to check? CME Group publishes this daily. I'll drop the link in the description. Signal number 2, the gold to silver ratio. Right now, it's sitting at 88 to 1. That's elevated historically. Here's the thing. In 2010, 2020, and 2024, when COMEX cut silver margins more than gold, the ratio dropped an average of 8 points within 30 days. What to watch? If the ratio breaks below 82 in the next 3 weeks, silver is confirming relative strength. That's momentum. If it stays above 88 or goes higher, gold is still the safe haven and silver is just noise. Signal number 3, COT report positioning. The Commitment of Traders report comes out every Friday. It shows who's long, who's short, and how much. What to watch? If commercial traders, the big banks, start covering shorts while large speculators, hedge funds add longs, that's institutional confirmation. If commercials add shorts while small traders pile in long, that's usually a trap, and COMEX will probably raise margins again to flush them out. Next key report, Friday, May 2nd. That's the one to watch. Let me be straight with you about what's actually happening here, because I don't want you walking away thinking this is some bullish silver moonshot signal. It's not. What this is a mechanical adjustment to market structure that creates the conditions for larger price movement in either direction, depending on who shows up and what they do. COMEX doesn't cut margins to help you get rich. They cut margins because their risk models say current volatility levels don't justify the collateral they were requiring. That either means A, they genuinely believe the risk of a major move has decreased, so they're comfortable opening the floodgates, or they're inviting more participants into a market they can still control with another margin hike if things get too hot, just like they did in 2011. Both interpretations have historical precedent. The data over the next 2 weeks will tell us which one is playing out. But here's the part most people aren't connecting. The gap matters because it shows intent. COMEX could have cut both metals equally. They didn't. They could have cut gold more. It's the bigger, more liquid market. They didn't. They cut silver almost double what they cut gold. That's not random. That's either confidence that silver volatility is contained, or it's a setup for something bigger. And if you look at the 3 previous times this happened, all 3 led to significant silver moves within 8 to 12 weeks. So I'm not saying buy silver now. I'm saying watch the signals, understand the setup, and position accordingly if and only if the data confirms. Because in markets, the people who win aren't the ones who react fastest. They're the ones who understand what they're watching and wait for confirmation before they move. All right, 3 things before you go. Comment one of these. Physical if you're holding bars and coins long term. Futures if you're actively trading contract. Watching if you're studying this before making any moves. I want to know where this community actually stands. 2, if this breakdown gave you more clarity than anything else you've seen on the COMEX margin cut, share it, tag someone in the comments, send the link. Most people are going to miss this because they're watching hype channels that just scream silver to the moon. Don't let your circle be those people. 3, and this is the big one, the next silver signal video drops in 72 hours, and we're going deep on COMEX inventory levels and delivery stress. Because here's what almost nobody's talking about. The margin cut is interesting, but the warehouse data is showing something way more significant, and it's happening right now while everyone's distracted. Don't trade headlines, trade signals. I'll see you in the next breakdown.